Well, great introduction and everything, and I also appreciate being here. It's great. If you guys have questions, feel free to send them in the chat. I'm here to answer all kinds of questions. If you're new to DTT as well, it does go pretty in depth, but at the same time, I'd like to break it down in more of a basic manner so it's easy to digest and understand. Because in reality, it really is once you get down to it. All models have the same framework, same principles, same ideas. It's just a different time, and that's really what it's all about. It's just a whole different time throughout the day. What DTT really is, and we're kind of seeing currently here with the indicator, is we just kind of break down the daily profile, at least for the intraday models. Everyone knows the Power 3 or has heard of it. So when you have those manipulations on the wicks of the daily profile, that's where you would like to get sharper entries, right? Sort of get into that distribution phase. But in reality, what DTT does is it just breaks down the entire day into subfractal models. So you don't have to capture the whole daily profile. You can just get in on any one of these models, look for a quick scalp with the same framework, same principles as the other models. They all work the same, and look for trades with that. So with that being said, if there's any questions here, feel free to write them down. But I will be going over what the indicator has here. What I really love, and I'm honestly really grateful for with Josh and the Toodegrees team in general and too, is that they've automated the whole process. So I used to have to draw this by hand, and as you would likely guess, it's definitely a pain to draw everything right. So with this being automated, all I have to do is just get ready for a setup to take a trade on and look to capture that setup. Great question by Tweet Visualizer. What does DTT stand for? It's a name that stands for digital time theory. It really started as a hypothesis that, I'd like to view the market again through a fractal nature. Just like price, if we go up a time frame, for example, if I look at a candle, I can see that this is a bearish looking candle, but if I go to the 5, we can spot the same type of candle on the 5-minute or 15-minute rate. What does that imply? It means price is fractal. What you see on the setups for the 15, you can also see on the 1-minute. The same thing goes for time. So what you see here, we can also see on the weekly profile and or the yearly profile. And what it really is just breaking down a profile. So whether we're looking at the daily or the weekly, we just break it down into different segments of time and looking at it through what's called a time series analysis. Sounds fancy, but in reality, it's not. It's just you look at specific things to happen at specific times. That's all it really is. So I hope that answered your question there, Tweet Villager. But in general, if we go to the indicator in of itself, I currently just have the intervals on the outside plastered on here. So currently we're observing model 1001. This is the current model for right now. And what we'd like to observe with this is a continuation of any previous move that we witnessed over here. Something I'd like to reference, perhaps later in the stream, is this magical box down here. I'm sure a lot of people are curious about that. And this is just from the weekly model right here. So maybe we'll talk about that in a second. Is there any other questions so far here? Yeah, I mean, there's free ebooks. Not gatekeeping anything. You guys have access to it if you really want to use this to your advantage. I mean, it really just cleans things up for yourself. For me, at least, gives me a whole lot of patience if I turn on the previous models for the day. So history, look back. You can kind of see what I mean here. Throughout the beginning of the day, there wasn't really that great of price action, right? I mean, we kind of got stuck in a range here. With that being said, I kind of like to wait for an extreme side to be taken out. Maybe use the weekly models too. That's why I have this on here. And in this case, we took out all that sell side. So I'll look for price to potentially push back into the range. With that being said, I can then use this model to look for a move to the buy side here, with all this being low resistance. Looks like it's going for it right now. And I guess the next question is, what are these blue boxes here? Let's just focus on this model here. You can see price pushing up into it. So something I'd like to reference as this is happening in real time here. This current buy side is about to be attacked. There you go. Something else actually that just popped into my head. DTT traders that have been trading this for a while. Actually, JB just brought up the image there. Perfect. I appreciate that so much. I'm going to put it on the chart here. Today is Thursday. What does that mean? It means this model specifically tends to have higher volatility than the other models in comparison. So as we can see, what did the rest of the day do? It didn't do anything really. Kind of just jumped around. What is this model doing? It's expanding. And what is it? It's Thursday. So not only do we look at breaking down the daily profile, we also look at specific times and specific days of the week. So I can literally wake up, look for a setup. Obviously, if there isn't a setup, don't take the setup or don't take a trade. But if there is a clean setup, kind of like this, there's buy side here, that's low resistance. I can then expect this model to have higher volatility throughout this time period. So what is that? AMR down here. That stands for average model range. The average range of each model. So if you ever thought about it, I think Toodegrees has this, the average daily range indicator. It's kind of like that, but now we're doing it for fractal models. So you could jump into a chart any time of the day, hop on this indicator, look for AMRP to be tapped if there's a setup, and have a small scalp like that. Seeing this, the current range is 53. Super basic and easy to understand. The current range is 53. On average is 77. What does that mean? It means we can still move up a bit. We can still move up around, let's say, 24. We still have some opportunity to run, and we still have AMRP up here. Any questions on this? Let's see. Looks like Josh is answering some of the questions. Tu is trying to hop into the live there. But that essentially is the basic way to put DTT. It's not complicated. I know it's like, oh my gosh, there's this book and everything. It's free. But if you just take the time to realize, oh, every model has the same principle. Every model has the same framework. Now all I have to do is build off that framework. So now the next question is, what are these gray boxes here? These are root candles, points of liquidity. Now, when I was developing this DTT, I would notice that there'd be a lot of liquidity specific times of the day. And I started gathering data surrounding that. Specifically for New York, it's more prominent here. And we can kind of see how price gravitates towards those root candles. So couldn't quite pass it there. Goes back down to the weekly root. And once we're able to hold these root candles, we can then use them as support in a way to gravitate towards AMRP up here. So with the root candles, these are the roots here. I can use those as draws on liquidity. So let's say I'm bullish from here. I can use it to target the root from the previous model. I can use it to distinguish premium and discount of the current model. So because we're above the root, this is premium of this model. I can also use it to distinguish discount of a model, right? What does that do for me? It means it gives me better risk to reward. Now, not only do I have the right time to trade, not only do I have the right day to trade at a specific time, I now also know where I should long, where I should short, and all I have to do is create a framework of an entry. That's it. DTT does the heavy lifting for you. It literally tells you what time and where and what to look for. And in reality, all you have to do left is just look for some decent entry to scalp with. So for example, what we're currently seeing here, this is a pretty large move that we're seeing from the beginning reversal down here, right? Again, because of AMR, we could still move a little bit, maybe 20 or so points. But something else I want to portray is that, yes, we're at AMRP up here. What does that mean? It means, while I can still long up here, form a long entry on a data wick that I think that got left behind, it means my risk is a bit more, specifically in this model. On the contrary, if I saw a setup down here, my risk would be a lot less. Knowing that that's the average model range, I'd have less risk on the table. Well, it could still work here. My risk is a bit larger. And when I'm talking about risk, I mean the probability that it's going to fail is larger because we're already at the overextension here, AMRP. So does that make sense? That's a great question by David. Can I share when to stay out? So I was actually live in the morning in the community, the DTT community, and I did not take a trade here. I mentioned I wanted to see price go to this root candle, which we'll talk about in a second, off the weekly models. And from there, I can look for an entry. So I had an entry here. Obviously, price snapped back, took me out, and I framed a re-entry here, and I got the move I wanted. Now, the idea is, why am I staying out from this area here? Why am I not engaging with price? I could quite literally scalp off the AMRP levels. They are so accurate. I mean, props to the Toodegrees team. That's just insanity right there. You can literally see how it taps into that, as well as the previous root candle. So I can trade based off that, get some entries here and there. But why I stay out is because if I look at the models here, the chart down here, you'll see in a second why I decided to stay out. Look what happened overnight. This is a different way I use AMR. If I go here and I see that the London DTT models were not as volatile, look at that, below its average model range. Big Ben, below its average model range. Judas, below its average model range. Model 11 too, below its average model range. So what does this all mean? It means volatility is low. I don't want to be a part of the market when volatility is low. As traders, we want to be there when volatility is there. And so if we start to see this build up, you can see all these models here. All of them are below their average model range. What should I be on the lookout for because of that? I should be looking out for the next model, in this case, model 1001, that we're seeing real time. Because if all these models are experiencing non-volatility, this model is going to expand. Time distortion equals expansion. That's all it is. Any questions on that? So that's what I look for, and that's where I don't engage with price, is if there's no volatility. If there is volatility, I'll just look to frame an entry. Yeah, this is all in the PDFs that's available for free to you guys. See any other questions here? Where did I get the Icarus root? Let me ask Josh here. Hey, Josh. Cool if we do a quick tease or no? Perfect. So if you were to draw this automatically, or manually, excuse me, you'd have to go to the weekly profile, right? So Web asked that question. You'd have to go to the weekly profile, and you can see how long it takes if I were to do this manually. It goes from Sunday, 6 p.m. to the following Sunday, 6 p.m., right? With these fibs. You break it down to the next 4 models for the week. Same framework as the intraday models. Same idea, same thing. We're looking at the roots. we're looking at the previous model's range. It's the same thing. But now we got some automation here. And so where I grabbed the root candle from, it's the same framework. But now we're looking at the 15-minute chart. So this is the lovely aspect of DTT. If you're a scalper, adhere to the intraday models. Look to frame trade ideas based off those. If you don't have much time in the day, you're looking to do a quick scalp, use the intraday models. Again, maybe you're a swing trader. DTT provides that as well. Not just time, but it's the same idea. Look at this. Average model range. We dipped slightly below yesterday. What do? We pop back up and we hit this. What's this? Equilibrium of the previous model of the week. This range here. I mean, it couldn't get better than this, in my opinion. Like, this is all I could ever ask for personally. I'm excited to show it to you all. I'm excited that everyone can use this. And I'm really happy. And, when Tu showed me this, I had the biggest smile on my face because this is like a dream come true, truly. Like, automation to the furthest extent. Like, just being able to swing trade when I want at the right time, seeing the key areas, average model range. Same idea here. Look at that. And also being able to scalp intraday doing the same thing. Like, this is absolutely insane. Like, if I were to show you crude oil, it's the same thing. It does this on all ticker symbols. You frame trade ideas based off this. Price really shouldn't bypass this area, and I'll get to it in a second. If it does bypass it, it's a whole different story, which I'll get to in a second. But you just frame trade ideas based off that. Look at that. AMRP to AMRP. This is the 15-minute time frame. You can literally swing with the right setup and not experience stress. Don't be stressed out because you know the key areas. You have the root candles, AMRP, etc. So really is a beauty. And I'm just really, really happy that this is a possibility and that this is available to everyone. So if we do overextend, kind of like we did on Wednesday, this is an example of a mean reversion. I've posted about this, but it's when essentially we tap outside of the average model range. Think of it like the extremity of volatility. If this is going to the sell side, we're kind of popping out right here, right? If we see, usually what I tend to look for in this case, this is a type of framework I like to look for. It can happen intraday too. We go outside of the AMRP. I like to look for inversions there. Once there's an inversion, it's telling me that price is disrespecting the opposite side of the PD array matrix, as ICT likes to call it. And I'll then look to trade back into the model's range. So for example, that's a mean reversion. We can then frame trade ideas to, well, this is the craziest part. People see this, and without having the indicator, you'll see this as a regular 15-minute SIBI, and you'll look to short here, right? You're going to look to, the whole day it's been going down. Might as well look for a short here. But if you have this on, you'll know that we're below MRP. So I shouldn't be looking for shorts. I should be looking for longs. If there is a long opportunity, I can frame my trade idea based off that. With the mean reversion, you tend to see snapback moves pretty quickly. The current mean, the average of this, is going to be the open price right here. You can see how we've been using that. So whenever you see an overextension, to put it simply, just be careful. Don't FOMO in. This is a way to teach you not to FOMO in. Is if you see an overextension like that, you'd want to be on the opposite side. So any questions on that? That's where I got the root candle from. I know I kind of went on a tangent there, but I really wanted to talk about that in depth. Yeah, of course. Really well said. Really well said. Really detailed too. Yeah, and that's just to put it simply is if we're at the buy side AMRP, I might be careful that there might be some profit taking from any buyers down there. This is the average expected move of that distribution of AMRP plus and AMRP minus down here. So I'll look to trade and frame ideas based off that. If we're kind of stuck on the range here, let's say we don't really expand, that's where I start to integrate the intervals. So each model has intervals in between. And that's sort of where we can expect expansion, consolidation, and or reversals occasionally, right? As we bypass these intervals. Now, again, these were derived from data, but to put it simply, as price goes through time, it starts to consolidate, it starts to expand, starts to reverse. So whenever we bypass one of these intervals, let's say I was in a long here, etc., or maybe from down here, as we bypass these intervals, I'd like to see price continue going my way because potentially these are key times, and potentially as we pass one of these intervals, price can start to consolidate and perhaps retract or retrace back down. And that's a possibility I have to keep in mind as the day goes around. So this is really important to know because occasionally you will see time distortion. And I think there was a couple of good examples from this week. So if we go back in time a little bit here, you tend to see this a lot during New York Open or the Judas model. So I just really want to mention that. For example, yesterday, this is something we talked about in the live session in the community. For those individuals that were there, price was distorting at NY Open. You can see it's not really doing a whole lot, right? So what's our key time here? It's going to be 9:55, which is the beginning of the model, Judas. So if all this is time distortion, I really should be looking for expansion in the next model. So here, it automatically populates. I have my AMRP levels, I have my root candles, my root candle from the previous model, my current root candle, and I look to see if there's expansion. You can see clearly there was. So you tend to see this a lot. I mean, time distortion, a lot of folks talk about it, and it's a lot easier to see it once you have these key times. So if I know NY Open didn't move too much, I should then expect around 9:55 to frame a trade idea and to have expansion thereafter. So it's just something I really admire and I've been using for the longest time now. If you guys want to check it out, I used to post executions all the time, kind of with the same idea here. And now, again, if you don't see it here for New York Open, you also tend to see it a lot in this model. So if you don't see it there, if you see this instead, again, 1020, which is the end of this model, you'll see the same thing. It's going to expand. So that's another way I integrate DTT is if I see consolidation, boom, all I look for is some trade idea to get on the right side of the market, and I'll look for expansion at the right time. So past 955, boom, what happens? It drops down. And again, if I was in a short from that trade idea, let's say I was aiming for lower, I'd want to see it go lower, but what happens at this interval? 1007. If I want to see it go lower, I want to see price not really push up at that key time. But instead, what's happening? It pushes up at 1007, back to MRP. So I have to be a little careful. Maybe I can adjust my trail stop. Maybe I can adjust my trade, take some partials. We did just go below AMRP here, etc. You know, maybe in the next model we could pop back up higher. And then go lower. So that's really all it is. And it is something I just really love using. I mean, to me, this is kind of broken. It's like a cheat code almost for me because now we have time, the area to look for, the overextension too. If price starts going up here, I'm not really going to be looking for longs. You know, yeah, I mean, it could go higher, but I'm not going to be looking for longs. I need to be looking for shorts. So that's really all it is. Exactly. Exactly. Right now, what we're seeing is that rejection of this AMRP up here. Now, of course, with price, we have this classic inversion that probably a lot of people have spotted. And as we bypass 1320, I'd like to see continuation down if I'm looking for sell side to be taken out. I'd like to see continuation down into the next AMRP. Something I'd look out for, though, are the root candles. If we can hold these root candles, as you can see here, price is kind of respecting them. We're not really going lower than that. Then this is just a retracement on a larger move. So that's something to look out for there. Yeah. I mean, price is respecting it to the tick right there. So there's all different types of ways, but to manage your trade, get in at the right time, look for the right areas to get in. That's what really DTT is about. It's to amplify your patience because I know a lot of folks are looking for that, and that's really what it is you kind of know the key area. You also know the right time, what to expect. So it really gives you and amplifies your ability to have patience as a trader, which I think a lot of individuals may need. And that's really why I went this direction personally as well, because I personally have a lot of patience and this is what I was looking for. So I couldn't find anything like this. So this is why I chose the direction I did and made it on my own. But now we have automation from the two team, which is really a blessing. And I couldn't ask for more. Of course, Sponge, my pleasure. I'm glad to hear your entries have improved. Yes, they're established in the 1 minute cold brew. Yeah, definitely. I'd say probably the easiest introduction, again, will be the AMR. Just knowing the actual area. Like, you don't really have to be super well versed. You could be a beginner with ICT, is what I'm implying here. But just knowing the actual area where you should be looking to frame short or long ideas. To me, that's all you really need. And if I just backtrack here, this is the Aries model for the week. And I'm simply just going to turn this off for a second here because I really want to just portray the powerful nature of AMRP, right? So I'm going to turn that off for a minute. Now we just have AMR, the gray boxes here. Just seeing this and just being new to ICT or even DTT, this is probably the biggest aspect of it. You know, you look for trade ideas here. If I know I'm above, I'll look to short. I could short into key levels, you know, look for liquidity pools. I can also use the root candles if I turn that on to target root candles as well, right here. But I think that's the biggest factor, and I hope that answered the question, Josh. That mhm. All right, looking at this one over here. There you go. There's your mean reversion. All right. I am as well. I mean, I think Josh couldn't have said it any better. It really is just about fractalizing and looking for specific entries around those areas. It doesn't necessarily mean you just start shorting and longing, and I want to make that clear. Like Josh said very clearly as well, you'd like to frame some trade idea, right? If we were to look for a tracement back into the previous model's AMRP or the previous model's root candle, you'd like to frame a trade idea based off if there is a setup with price. So when time and price align, that's all it is. But again, you're not just going to start inherently longing below AMRP or these levels here. You're going to look to see if there's some trade idea, right? And again, if we're using both the weekly and intraday models, we can get much, much sharper entries. If I know on the weekly this area is premium, I can then jump into the intraday profile. I can then look at the London models, Asia, New York, and frame trade ideas based off that, acknowledging that I should probably be looking for a move to the sell side if I know we're overextended here. Again, it doesn't mean that you're going to inherently just start shorting. You'll look for some setup with price, but when you align both together, you fractalize everything, you can refine your entries so much more and your risk is lowered. Does that make any sense? Yeah, I'm excited as well. Yeah, it looks like just briefly turn this one off here. There we go. And you can see something I want to talk about here is how you can see the strength leader in comparison to the AMRP. So here on the right, we have the S&P. On the left, we have the NASDAQ. Just from that, you can tell which one's stronger, right? The NASDAQ is clearly the stronger pair here compared to the S&P 500. I don't know if you want to add anything to that, Josh. Here's another example of that up there. You can see the S&P was weaker in comparison to the NASDAQ. So there's your root SMT. You can pick and choose if you're opting for shorts as a swing trader. As we know and reference quite often, is you'd want to short the one that's weaker, essentially. The other one's going to have a sympathetic decline in comparison to the S&P, but this one is clearly weaker because there's that discrepancy with the root candle up there. So I just want to reference that again. And it happens again in this model here. I mean, just seeing that happen, knowing which one you'd want to opt to short or long based off that metric as well, really amplifies your entries. With DTT, it breaks down the daily profile into fractal models. Same thing for the week. We know the area where to look for longs or shorts. It doesn't mean you long or short right away. I like to, personally for me, I like to include the discretionary bias I have with ICT terminologies, whether it's an inversion, Fibonacci, you can use a different model, etc. That's how I like to frame my entries. However, if you have a different metric for entries when it comes to price, then I would say first start off backtesting. But in general, DTT provides that framework with the actual average model range and as well as the key times, intervals, etc. It's all the same. What is the difference is your trigger for an entry. So I don't know if you want to talk about that, Josh. Beautifully said. Yeah, and I think that's exactly how I would use it too, is I use, for example, the power of 3 indicator by Toodegrees as well. If I'm watching the 1 minute time frame, I'd like to have the 5 minute on the same screen without opening another panel. And that's something I personally like having. And I use these indicators, and for example, DTT, I'd use it to frame my confluence with perhaps something else I might be using. In which case, personally for me, it will be ICT, right? Which I've studied, and it's just something I personally like using because I like precision and knowing where and what to look for. However, just like Josh talked about as well, if you're using a different system when it comes to price, don't be afraid to backtest and check it out, because when you combine it with DTT, it's all the same. You're just looking for a different trigger or entry to your actual trade. And I just want to make that clear, right? You could be trading something else. It doesn't have to be ICT when it comes to price. But as long as you frame an entry idea with a model you know, and you acknowledge the time, the model, the area where you should be looking for, that's all that really matters. We'll see. I couldn't have said it better myself. I think, for example, on this trend day, that's something I want to reference. Model 11, which is up there, had that overextension, right? Obviously, if we frame the fractal nature and trade ideas based off the weekly models, we can conclude that we'll probably see some sell side pressure on this day. So this was a clear portrayal of a mean reversion, which I referenced earlier, where we kind of overextend that AMRP. We see a move back into the range. Now for the next models, a lot of heavy selling pressure, right? However, something to note is you'd like to see the same price signature. Because we're not seeing it here on these models, we're not pushing back up to AMRP. That selling pressure is going to remain consistent until it does so. For the next model, model 1001, we tap AMRP. It can change the look back setting as well. I have it on 10. We're overextending to it, pushing back down below the root candle, and pushing back down AMRP minus. Is there a possibility of a mean reversion here? Yes, But there was just so much volatility this day, a lot of selling pressure. If we don't see a recovery below AMRP, then we'll continue seeing that selling pressure until a key time, the next model. What happens on this model now, 1409? Again, if we go to the weekly time frame, you'll see that we went below AMRP on the weekly models. And we combine that with the lower time frame models, and we can frame much better entries based off that. If I know on the weekly models this is my AMRP and we're overextended, I can then use the last model of this day to frame a trade idea to go back up. Well, I hope that answers everything. I'll leave it at that. I appreciate everyone's time and just being here. So. Hey, ask her when the album is coming out. Okay. Josh, ask her when the album is coming out. She'll put it on her YouTube. And we got Alex. What's up, Alex? Hey, keep typing everyone so Josh has to keep saying the names.